Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, so, another update yesterday, and it's just a function of grinding in here. We did 4 days in this box. Not a very good attempt at drawing a box, but we did 4 days at this box. And essentially the box goes from 1620, up to 1632 half, 1633, whatever you want to call it. And that little trading zone was established as, at a minimum, 20 was established as a floor. Then you saw the breakout over the top of the box over 32 half, and that was all that the bulls needed to run it up. Yesterday, you just saw more residual. I think that, on tighter time frames, the bands are very wide on this time frame, and they're getting so wide that touching and breaching that upper Bollinger Band is becoming more and more difficult as time goes on. So I'm kind of changing my thinking from a punch of the Bollinger Band as an absolute prerequisite to a pullback, because with the bands this wide, and they haven't been this wide in over a year, it sets itself up for an exhaustion top. But we'll have to see how it plays out. I'm not anticipating anything. We're still slowly getting into a short, but I mean the reality of what happened yesterday was we did a nice ad up at 58.5 over in the chat room, and then we got the break down into the 47, the 49 area, 50-49 area. We took that ad right back off for about 8 handles, and that's how you've got to trade this thing. If you're gonna try to scale into something short longer term, but the market hands you 8 handles or 10 handles, you have to take it. We did one for 8 yesterday. We did one for 10 a couple days ago. If it's going to hand you those kind of moves inside of an uptrending market, if you choose to do the counter trend trade, that's what you have to do. You have to take your profits where you find them. So jobless claims, housing starts, CPI, nothing was really where they wanted it to be, and we've pulled back a little bit here. Bonds have gone up, and the market's gone down. I continue to believe, and I say every day in the room, until bonds can find a sustainable bid for an entire day, and the ES can take out the prior day's low, you're not going to see any kind of a pullback that is going to last more than a couple of hours. If you want the real deal pullback, and the real deal pullback starts, from wherever the high may be down to that middle band, you're going to have to see some previous day's lows taken out, and you're going to have to see bonds go on a little bit of a rally. Until you see that, we're just going to get these little blips down. And while we get those blips down, if you're going to trade from the short side, you better take advantage of them when they come. Take your profits, increase your basis, and move on. Okay? But don't be holding for the mother of all short trades. Anybody that's held for the mother of all short trades is either in a lot of pain or they're completely out of money. Don't be that guy. Because what's more likely to happen on this on a downdraft like this one here after the 830 number? What's more likely? This is it. We're going on the pullback of pullbacks to the end of time. It's all, we're done now. Finally, the bell is rung. Or are we going to tick down for a few hours and and have the dip buyers come in and take us back to highs? What's more likely? I would argue that it's far more likely that it's far more likely that it's just a temporary thing for a few hours and the dip buyers are going to come in. Why wouldn't the dip buyers come in? This is a question you have to ask yourself. Why wouldn't they? So absent some large macro event that changes the entire thinking of the market, those dip buyers are always going to be there. And you have to assume that if you're going to trade these markets. Okay, everybody have a great day. Mike Vacchi, PrincetonTrader.com. I'll be back tomorrow morning with another webcast. Trade them well, everybody.